My name is Andrew Thake, and welcome to our to this week's Minds and Money 5 at 5 show, which today is sponsored by Year Energy, Goviex Uranium and Standard Uranium, and it's brought to you in association with Resource Global Network. For those of you attending 5 at 5 for the first time, the aim of the show is to have 5 guests at 5 p.m. and to maintain engagement between investors and miners through a lively, interactive format whilst we await the return of physical events. A few admin announcements before we start. In order to make the question sessions as interactive as possible, please have your video screen switched on. And if you want to ask a question, you can either submit a question via the chat function, which you will see at the bottom of your screen, or you can also go in on the participants function. You can go and wave your hand virtually. Myself and my colleague Kelvin will then unmute you, and you can ask your question live. We'll also be having polling questions throughout the webinar where you can vote. So without further ado, we've got a great lineup of guests. They are Klenda, who's Chairman and CEO of Year of Energy. We have Daniel Major, CEO of Goviex Uranium. John Bay, President, CEO and Chairman of Standard Uranium. And Warren Irwin, President and Chief Investment Officer of Rosseau Asset Management. The three mining companies, which we're going to focus on today, all have focused on uranium. So let's start off with a polling question that we're just going to bring up that should be appearing on your screen now, as to where do you expect the price of uranium to be over the course of the next 12 months? Very, very simple choice of answers, higher, lower, or unsure. But whilst you are voting, let me turn to Warren Irwin, who, as many of you know, he runs one of the world's most successful hedge funds and is considered by many to be one of the best natural resource investors over the last 30 years. Warren, what are the supply-demand market fundamentals currently like for uranium?
Uranium is very fascinating. I've looked at a lot of commodities in my career, and right now I've never really seen everything lining up quite the way they are for uranium. You've got uranium, nuclear energy now being considered in the green basket of energy generation. Going forward with the electrification, we're going to need a lot more green energy, and wind and solar is not going to cut it. So what we're going to need is non-CO2 generating baseload. And right now, nuclear is the only option we have for that. We've already dammed up all our rivers. And so on the demand side, the demand's there. China's building out. I think they have a 4% growth rate in their nuclear power capacity at present, going out to till 2060. So there's a build out ramping up, building on the about 440 reactors we have. And so on the demand side, the demand looks quite steady, quite robust. And on the supply side, we have a very unusual situation in that we have a massive gap in what is consumed and what is actually mined, and it's made up by secondary supply. And by some accounts, that secondary supply is declining, and a number of the mines we have are closing. We've had 2 close in the past 12 months, and the mines are getting old and tired, and money hasn't been invested. So we need to get higher prices in uranium before anybody will be spurred on to build a new mine. So it's a very exciting time for the uranium space.
Mm. And you could have just talked about some mine closures there. What is the future for Kamiko and their Cigar Lake and MacArthur properties?
Yeah, well, so compared to, let's say, the Kazakhstan's, like Kamiko is the second largest producer, and their cost base is higher than it is in Kazakhstan, just due to the low cost of in situ recovery. So Kamiko is sitting on 2 large mines. They're both closed right now. MacArthur River has been in operation since the turn of the century, so it's an older mine. And as you know, with any mine, you mine the good stuff first. So it's an old mine. And then you've got Cigar Lake at present. It should run out of ore by the end of this decade. There are some options, I'm sure, in both instances where they could extend the mine life there. But what the board of directors will have to look at is they'll have to look at what kind of capital it'll take to do that and what price environment they're in. So for somebody like Kamiko going forward, it'll be very, very important to have a higher price deck for them to, first of all, start up their mines again, and then make the reinvestments they need to extend the lives of both these mines. So in all instances, if price doesn't rise, you're going to knock out the second largest producer of uranium, which of course will lead to higher prices, but that's sort of one of the dynamics there. If I told you in the copper market that the second largest producer needs much higher prices to operate or to make a decent return on their capital, it would be quite an unusual situation. And this is actually what's playing out right now in the uranium market.
Talking of prices, I think we can close our poll now, and I think my colleague Kelvin can just share the results on the screen. I think that 96% of you think that the price of uranium is going to be going higher over the course of over the next 12 months. Which kind of actually leads me into my next question for you, Warren. So, what are the sort of like drivers for uranium mining companies at the moment? We've obviously got 3 mining companies who will be giving us an update shortly. And what would you say to those mining companies as to how can they become the next Palladium Energy, which hopefully I'm right in saying this, that was one of the best performing uranium mining company of the last mining cycle?
Yeah, Paladin has legendary stories about it, basically going from, I forget the exact numbers, went from cents per share, which around, let's say 8 or 10 cents a share, to I think around $8. So there was fortunes made there. And I know of at least one instance of somebody retiring with $100 million from their job as a result of the move in Paladin. And that's why everybody is super duper excited about this uranium cycle. What advice can I give? You're already well positioned for a turn in uranium, and the reason guys like myself and Rick Rule and some of the other players who've played the uranium market, we know how violent the market can be, and it can be extraordinarily volatile. The last cycle that went from around the $8 to $10 range to around $140 a pound, and it led to fabulous returns like that of earned with Paladin. So that's all possible here, depending on the price of uranium. And you guys are already positioned prior to the big move here in uranium. I think you're in a great position to capitalize on it.
And what would you say to those that are backing solar and wind and who are anti-nuclear?
Well, I am completely anti-Greenpeace. If you think back to Greenpeace being anti-nuclear in the 1970s, it's half a century ago. They shut down nuclear power development, which was going through the biggest renaissance in U.S. history. U.S. right now remains the largest consumer of uranium for nuclear power plants, but they were on the biggest build out ever. And Greenpeace was anti-nukes. Well, here we are half a century later of burning coal. We've got global warming, not to mention the thousands and thousands of people that died early as a result of the pollutants from coal. And as far as some of the alternatives we have today, nuclear, in my opinion, is the number one. The new small modular reactors are amazing. They're fail-safe. They've also reduced the capital requirements, which is the biggest, because you're standardizing the parts. The outlook looks very, very bright for them, in my opinion. And if you take a look at wind and solar, I think, Texas has proven that, they're not stable baseload power. If you're going to try and run a modern economy, you need solid, dependable baseload power that runs night and day, regardless of whether the sun is shining or the wind is blowing. So we need solid CO2 generating electrical power to power the whole EV revolution and to start taking some of the last remaining coal-fired plants offline. So the nukes are standing up fabulously well, and finally governments in both the US and Europe are figuring it out.
Mm-hmm. And just one sort of kind of question with regards to your involvement in next-gen energy. How bullish are you about that particular investment? And then are you looking for organic growth, or are you looking to be acquired?
Yeah, well, as many of you who may follow the industry, NextGen is the biggest and richest undeveloped uranium property in the world right now. My involvement is I was the largest shareholder about 5 years ago. I've been diluted down, and I've had to reduce my concentration somewhat. I'm still a very, quite a substantial shareholder in NextGen. I think the future looks tremendously bright. It's operating in one of the best jurisdictions in the world, which is northern Saskatchewan. And it's in the hard rock. It's not in the soupy sandstone that's waterlogged like some of the other mines in that area, like MacArthur River and Cigar Lake. They're in waterlogged sandstone, which you need freeze walling and a bunch of other techniques. So NextGen has a number of things going from them in terms of not only the project economics, but also the ease of mining, and that they're in hard rock. So I think right now they are the absolutely top undeveloped uranium project in the world. The reason I own it is I'm possibly a little bit conservative. I don't own a lot of these juniors, but these juniors could have one heck of a rip in a good uranium market and would outperform NextGen. And as far as who will put NextGen into production, I think there are a number of large suitors sitting out there waiting for NextGen to pass a few more hurdles with respect to permitting. And I don't think NextGen will be around very long. So that's sort of what I'm thinking. And if we could throw in but I'm not necessarily excited about the takeout as much as I'm excited about uranium going from 30, 60, or possibly higher. Things could get a little crazy there, and a company like NextGen and some of the panelists today, their share prices could absolutely rocket if we do get the price movement I'm expecting in uranium. Okay,
thank you very, very much for that. So I think that nicely sort of segues into our first mining update of the show. Just to introduce the speaker, over the last 30 years, Jeff Klenda has acted as an officer or a director of numerous publicly traded companies, having taken his first company public at 28 years of age. Mr. Klenda also co-founded Your Energy in 2004. He's served as the chair of the board of directors and executive director of Your Energy since 2006, and has been chairman and CEO since 2016. Jeff, over to you.
Great. Thanks so much, Andrew. And thanks, ladies and gentlemen. Thanks for taking the time to join us this evening. What you're looking at on the screen is the interior of our Lost Creek processing plant, which we firmly believe, I think, is still the state-of-the-art ISR facility anywhere in the world, having been constructed in 2013. And what you see on the right side of the slide is our finished product. When it goes out the back door, goes out in 875-pound drums, and at, say, $50 a pound, about $44,000 per pound, $44,000 per drum. So that's the business model. And we have been in production solidly. Next slide, please. We've been in production solidly since 2013. So we've got over 7 years of production under our belt. We've obviously pulled that back now. We're on care and maintenance, obviously in lieu of the price being in the $30 range and persistently staying in that range for some time now, and for a while down into the lower 20s. So we've controlled our production at lower market levels, at controlled market levels, and we will continue to do so. But one of the things that has emerged from this is that we believe that we are the lowest cost producer outside of Kazakhstan. In our largest year of production in 2015, we got our C1 cash costs down to $16.26, and our all-in sustaining costs came in at just over $25 a pound. One of the things that we've done that's been unique is that we are one of only 2 remaining producers left in the United States, and we have kept our core operating staff on hand, and they remain with us. And so we stand ready to ramp up production at any time. And in fact, we've just recently expanded our footprint at Lost Creek. So we've expanded the permitted area. We've also enabled ourselves to access the next stratigraphic horizon. So we've done a good job of maintaining the facility and augmenting water usage and so on while we've been in this care and maintenance mode. One of the things that saved us over the last 10 years since Fukushima, and we just marked the 10-year event since that occurred, was that we had contracts from 2013 all the way through to last year when we delivered into the last of them. That kept us in good stead, and it enabled us to really limit our dilution out in the marketplace. And it enabled us also to build inventory. So we feel very good about where we are as a company. And now with the new Biden administration coming in, as Warren already pointed out, they are making nuclear kind of a cornerstone of their clean tech mandate, or their clean energy mandate. Next slide, please. And we believe that this is something that's going to bode very well for us. Now, I'm not sure that I have a lot to say here on the catalysts, because I think Warren covered them pretty well. But one of the things that I would emphasize is that we are now in our 3rd year of a 50+ million pound per year deficit. As Warren stated, the rest of it being made up by above ground inventories or secondary supply. And when you talk about just about any other commodity, you look at a commodity here in uranium that consumes approximately 180 million pounds per year, and you have a 50 to 60 million pound per year deficit. I don't know of many commodities that would not be skyrocketing in lieu of that type of a deficit now in its third consecutive year. If you take a look at Trade Tech, WNA, they're all calling for rising prices and rising demand in their lowercase, base case, and uppercase scenarios. So we think that this is something that's coming in, and with the micro reactors and small modular reactors on the horizon, the demand is only going to grow. And because of COVID last year, we only had one reactor that actually came online. This year, we're expecting as many as 12. So there are a lot of market forces that are driving this market. The pandemic, of course, is a big part of that. Kamiko and Kazakhstan are in the market as buyers, and we've seen over the last few weeks a number of other players come into the market consuming the available inventories. But most notable out of this administration, well, actually it came about from December, so it is out of the last administration, was the $75 million appropriation for the beginning of a uranium reserve. And that is something that will be bid for as we move through this year, and we stand ready to deliver into that uranium reserve that's being stood up here in the United States. And of course, the Russian suspension agreement was just extended and amended. And I think it's worth noting that, look, we are without a doubt the most politicized commodity on the face of the earth. And to all those names that you can see on your screen in the lower part of that screen, you can now add Ukraine, with forces building on both the Russian and the Ukrainian side. Next slide, please. This is something that's important to understand, because at any time, if we find ourselves in a position where those supplies there's a disruption in the delivery of those materials coming into the United States, we have allowed ourselves to become so dependent. We are virtually 100% dependent on foreign countries for our nuclear fuel now. If there was a disruption in the supply coming in from Russia alone, our U.S. utilities would literally be in crisis overnight. I think that we've provided for ourselves very solidly. We have about $18 million in cash, gives us solid runway. If everything were to stay exactly as it is right now, we're good all the way through to 2023, in fact, into 2024. We have inventory, which is all U.S. produced inventory at Lost Creek, nearly 300,000 pounds. We've restructured our debt facility so that we don't have another payment until 2022. And then beyond that, we're in a position where, because we've kept our operational staff on hand, we firmly believe that we're in a position where we can ramp up to a very substantial level of production, £1 million per year runway. I can do that in about a 6-month period of time and at a cost of $14 million. I would defy any of my peers to be able to match those numbers. So we believe we can get there faster and at lower cost than anybody else. And that should put us in a position where we are in excellent position to secure contracts from the utilities when they do enter the market, which, by the way, I do believe will be in the second half of this year. So that's the end of my brief period of time, and I'll close out with that.
Okay, sure. Thank you very, very much. That was a really excellent summary. Perhaps sort of like handing back to Warren Irwin first. Warren, do you have any sort of thoughts about your energy, or any sort of like questions for Jeff?
Yeah, sure, Jeff. What is your grade and cost structure compared to that of the Kazakhs? Like, obviously, I'm assuming you're not in operation now, but what sort of price level do you think? Like, we're hearing in the industry needs kind of $50 to kind of get things fired up again. What's your thought as to what kind of price level would you start getting excited and say, okay, we got to seriously look at getting back on stream?
I think first of all, you're asking for a forward-looking statement there. So let me go ahead and make one. I do believe that if given the opportunity to go to £1 million per year run rate, that we can get our C1 cash costs down into about the $12 range, and our all-in costs, sustaining costs, down in the very low 20s, in the 21 to 22 range. And I think given the last 7+ years of production, we've demonstrated that we can get there. As to what prices we would begin contracting at, I've got to say that you need to factor in a lot of companies when they're talking about going into production, they're not talking about their CapEx. They're not talking about the exploration and development that needs to be, the money that needs to be spent on that in order for them to replace the pounds that they're producing. And they also aren't talking about what kind of rate of return they're going to provide for their shareholders. So in order to provide for all of those things, and on top of what we consider to be very low cost of production, I'm going to say that we can begin contracting somewhere probably in about the $45 range. And I think the average price, it's considered to be globally, is $50 or greater. But unfortunately, a lot of that part of the discussion about rate of return and replacing pounds and so on is left out of the discussion. We factor it in, and so we're very confident as to what we can do. And we think that we can contract at very attractive prices for the utilities.
Exciting times to be a U.S.-based producer of uranium.
We like where we are right now. We just need to get back on that Russell, right?
What are the other sort of like competitive advantages that you feel you've got over your peers within the U.S. uranium space, Jeff?
Well, first of all, I think it's just our low cost of production. But I think the thing that what you've seen is that many of our peers have gone into the market and have begun buying material. I've been asked whether or not we would be willing to do that. I think that we would be more inclined to either expand our own resources in and around Lost Creek, because we think that that's a very large resource that has not been fully explored yet and fully developed. So it's a forward-looking statement, but we do believe that we can double it. In addition to that, we think that we're in an excellent position to make acquisitions right now, but far and away, our greatest advantage over our peers is the speed with which we can ramp to 1 million and even 2 million pounds per year. And even a greater advantage is our low cost in being able to do that. I can get to 1 million pound per year run rate and sustain it, by the way, which is critical, which is something else that no one talks about. I can sustain that for many years, and I can get there for $14 million. I can get to 2 million pounds in approximately 18 months at a total cost of about $40 million. So I don't know that anybody in the United States certainly can match that. And I know that we're a lower cost producer than even Kamiko. So I'm going to stretch that out and say we're far and away the lowest cost producer in North America. And so we feel very good about that. And I think that is our greatest advantage.
Thanks. And just as one final sort of quick question for myself, I think you mentioned earlier on in your presentation, you just received another approval for your Lost Creek license. Can you just elaborate on that?
Yeah, that was a long time in coming, but we were very excited to get that under our belts finally. And what it does is that if you take a look at the Lost Creek property, it's actually very large. It's approximately 37,000 acres contiguous. And we only had a small portion of that that's actually been permitted. Now, with the new permitting that we've received, that footprint has been greatly expanded. In addition to that, we've increased the amount of production we can do at the plant from 1 million pounds per year to 1.2 million pounds per year, while still tolling another 1 million pounds, which would presumably come in from our second project, Shirley Basin. And then in addition to that, the KM amendment is something that was critical. We are blessed with having very good stratigraphic horizons that are really enclosed nicely with sealing clays. We have not even begun to go into the next lowest stratigraphic horizon, which is the KM amendment, which is the KM stratigraphic horizon. So this now gives us the ability to begin exploring that. And we believe that it's going to be just as prolific as the HJ, which is what we've been producing out of for the last 7.5 years. And I would stress one other thing that I think is significant. When we did our PEA, we modeled 80% recovery rate. Our actual experience in our first mine unit at Lost Creek was in excess of 93%. I don't know anybody in the world that can match 93% recovery rate.
Okay, thank you very, very much for that. I think
My
let's
pleasure.
Move on to our next mining update, but we'll definitely come back to Jeff later on for a few more sort of Q&A. So our next mining update is going to be from Daniel Major, who's CEO of Goviex Uranium. Just to give a bit of background, Daniel has been a mining engineer from the Camborne School of Mines in the UK. His career spans over 30 years in the mining industry, where he has established a solid track record, initially with Rio Tinto at the Rosseau uranium mine in Namibia, and Amplats and JC Limited in South Africa. Over to you, Daniel.
Thank you very much. And I haven't got the disclaimers here, but if you would go to my website for those, we'll deal with that there. Keep it to 2 slides. Really, we are an Africa-focused company. Earlier on in the conversation, we mentioned Paladin, which went from 7 cents to $7.50. It was an African-focused play. So money can be made investing in African companies. We are very much a development-focused. We are spread over 3 different countries. They are all mining jurisdictions. Niger particularly has been producing uranium since the early 1970s. It's was the 4th largest producer of uranium for many years until the expansions that have recently gone in Namibia. Zambia is obviously known as a copper producer, but is part of the very large uranium rift belt that comes all the way through there into South Africa. And then for Laos and Mali, that's a gold producing region now. It's the 4th largest gold producing country in Africa. And so really what I'm highlighting there is the skills are there that we need to be able to develop and build mines. They're also recognized mining jurisdictions, therefore their governments are focused on getting mines built. The mine permit in Niger, for example, took us 6 months to get, and we're fully mine permitted now in both Zambia and in Niger. The project in Mali is more of an exploration play and somewhat polymetallic. Regarding our whole board, we've just had some restructuring on the board, brought people in who've done financing of uranium projects in Africa previously and are currently running businesses in Africa. And so we have a structured board that's very much about development going forward. If we look at our projects, the Medulla project, we acquired that one back in 2007. Our founder, Goviex Friedland, the son of Robert Friedland, picked that up. We've taken that all the way through from pure exploration through to a pre-feasibility study. We updated that recently. What it benefits from as well as being right next to the infrastructure, we're actually adjacent to the Urano mines of Cominac and Somaïr, and it's actually Cominac, which was one of the mines that Warren mentioned earlier, that has actually just closed 8 days ago after 50 years of life. Our one mine permitted license is the same size as that Cominac license. So long life projects potentially here. The PFS that we've just updated was very much focused on looking at it from a debt perspective. How do we simplify our project? How do we make sure that the open pit mine that we start with can pay back the debt? We did our ore reserve cutoffs at $50. We did $55 for our costings in for the ore reserve calculations themselves. So this project will cover about 50% of its capital, which is about $350 million with debt. We start with a very low operating cost. Our cash cost, which includes a moly credit, comes in at $18. We've got an all-in at about 22, cash cost at 22 for the life of the mine. It's all-in is about 34, 35. We turned our drill rigs off back in 2013. We've got about 130 million pounds on that property. We can more than double probably through exploration, but we felt with 130 million pounds, we really didn't need any more. And certainly in a declining uranium market, there was no real reason to be spending money on drilling out extra pounds. But it's a very robust project. It's a country that 60% of its exports is uranium. So we have the government as a partner on this project as well. We own it 80%, the government's in for 20%. The second project we have, Matanga down in Zambia, is actually even simpler as a project. It is an open pit heap leach operation. I kind of describe it as an upside down ISR, very, very low acid consumption, less than 10 kilograms a ton to get the material out. Very low CapEx. The CapEx is only 120 million pounds. Both of these mines would plan to be producing just over 2.5 million pounds per annum. Higher operating costs at about $31 a pound for Zambia because of the lower grades that come out of it. But because of the low capital, it's coming in as an all-in at about 36. Again, a lot of exploration upside. We stopped the drills there. We have a number of trenches there that need to be extended out to expand our resource. But when you have two projects with current planned lives of 21 years and 11 years, they're already well set to go. Our focus has been on simplification. We are planning to build new mines, therefore as simple as possible to help us get through the planning and the technical review that needs going. We're starting to move forward now into the final feasibility study and starting to look at how we structure our offtakes to meet the debt requirements. And we've recently taken on a guy called Chris Lewis, whose background is in BHP selling uranium from Olympic Dam. Then he moved into Kamiko selling their uranium, and then with Uranium One. So a lot of experience there. Let's say a very large resource. And then lastly, the Falea project started as a uranium project. We are doing some work on gold there, but mainly because we have a license that will not have any uranium. And we feel the best option is, rather than just giving it back, let's see what value we can extract from that, sell it on and use that money to fund our uranium development. So if you just go to my last slide. Just point I will make, and it applies to the majority of us in this presentation, is that, you know, in the uranium market, every uranium company is likely to go up when the uranium price goes up. But if you looked at the 2004, 2007 cycle, the guys who made the most money were the people who were developers who turned themselves into producers. They got that massive re-rate that came through, and Paladin was one of those, building 2 projects in Africa. And I think that's also important here, that value is relative as well. You see the Athabasca stocks on the developers, much higher value, but Africa's coming in, but Goviex has still got a lot of value to catch up, even relative to its African peers, and particularly as our permit projects are already fully permitted. The other point I'll make is in the 2011-12 cycle, there's a question sort of Warren was dealing with as well on acquisition. The biggest transactions on acquisition were actually all in Africa, as the African projects were taken out by the French, the Chinese, and the Russians because they could own 100% of them, which is not possible in many of the North American jurisdictions. So, you know, it's a play on both sides. Goviex, let's say, large resource. We've got very solid projects. They're very simple. They're long life. The US, other jurisdictions are used to having uranium come out together. Niger, it's a standard product, but there's a lot of value still to be had out of Goviex as an investment. Thank you.
Thank you very much for that. I'll start off with a quick question from the audience, from Haraya Agnarian. What's the average grade of the Medulla deposit?
Medulla, 0.146. 0.14.
Warren, do you have any sort of thoughts on Goviex or questions for Daniel?
Oh, well, first of all, my thoughts would be, I agree with Daniel. I made a bunch of money in uranium in Africa last cycle. I was a big shareholder in Extract Uranium. We sold that out. Excuse me. Also, I was I think last cycle I also was one of the founding shareholders of, or certainly early stage shareholders in both Goviex and Global Uranium, both with operations in Niger. So I would concur, Niger is a good place to operate, or has been. Can you comment on some of the political issues right now in Niger with respect to some of the political uncertainty, and how do you think that might play itself out?
There's different aspects to that, Warren. I mean, firstly, I think the most important and very positive thing that's just occurred in Niger is we just had free and fair elections. The president, Issoufou, has just stood down after its 2 terms in office, and we've had free elections go through, and we have a new president come through, Bazoum, who was inaugurated on the 2nd and has just appointed his whole cabinet in the last few days and gone through. I think the other important thing about him, and this is where Niger differs from Mali, is that Niger has found a way to consolidate predominantly the various tribal groups within the country, and to have an Arab more associated with the Tuareg groups to come in just shows how you've had this sort of inauguration of the different groupings. There was some upheaval post the election in Niger, but as I pointed out to an American friend of mine, That kind of happens in the US where people storm the Capitol building. So it's not a particularly African problem. It happens in the US as well. There are clearly more obvious terrorism issues, but they predominantly relate directly to what's going on in Mali and Burkina Faso or in Nigeria, and really don't come into Niger a lot at all. You had a couple recently, and as the president pointed out, it was more like the French during the Napoleonic War coming through to raid to get cattle that they were looking for to feed themselves rather than real terrorism. So Niger, very much a Western-looking country. There's an American drone base at Agadez. It works a lot with the EU as well on stopping illegal immigrants coming through, re-education and sending them back again. So it's a very outward-looking country. Long answer for a short question. Sorry.
Okay. Warren, do you have any more questions, or if not, I've got a quick one for Daniel.
Go ahead, Andrew.
Yeah, I was just interested. It's maybe like a double question for both of you. I guess the first part is to you, Daniel. Is that I think that we're chatting before the show that you're part of one or two uranium ETFs. I think the selective uranium ETF was one. What would you say to investors that look at the uranium and look at the opportunities there, and then sort of decide rather than invest in Goviex to go and invest in a uranium ETF? Do you think that that's the right way of investing as opposed to investing directly?
Look, that's kind of hedging your bets without actually doing anything. I think the comment I would have as the uranium industry, because the ETFs are relatively new, is go to any gold conference and listen to the gold juniors there and hear their comments, because actually what the ETFs are doing is denuding the companies, the juniors, from the cash that should be going to them, rather than going into the into the ETF. So look, the ETFs will give you a balance. You don't have to pick and choose what's there. But I certainly think, as individual companies in our fight for capital all the time, as we go forward, pick the ones that suit you better, and it's better to have the money go directly to the companies rather than go into the ETFs.
Mm-hmm. And Warren, do you kind of invest in any uranium ETFs? Do you have any opinions on them?
No, I don't. But for the neophyte investor who's done some work on the supply-demand fundamentals and is a believer in nuclear power, it's probably not a bad way to play. You get a bit of exposure to quite a number of different names, and you can't probably less likely to blow yourself up doing that. It's probably not the worst thing in the world for somebody who wants that level of diversification. And you just have to realize that you may not have the expertise to choose individual companies, and that if you like the space, probably not the worst idea in the world.
Okay. Well, thank you very much for that. I think we now need to move on to our next mining update. But just before we do that, Daniel, you'll see there's one or two comments and questions in the chat box. So perhaps if I can allow you just to reply to those kind of questions whilst I go and introduce our next presenter, who is John Bay. John is the founder, president and CEO and chairman of Standard Uranium. He is a capital market executive with over 15 years of senior leadership in the junior exploration industry, with experience in uranium, gold, silver, lead, zinc, diamonds, and oil and gas. He has public company experience across several sectors and with the companies listed on the TSX, TSXV, CSE, and LSE exchanges. Over to you, John.
Thank you very much, Andrew, and thank you to Mines and Money for hosting us today, and of course, all the investors who've taken the time to join us today. And to my two peer companies, and Warren, of course, thank you for being here as well. So I'll keep this brief. We are not a miner. We are an early stage exploration company on the front end of the exploration side. And as you can see by this picture on your screen, that is northern Saskatchewan. We are in probably the best jurisdiction in the entire world to be looking for uranium and to operate there. Next slide, please. I will be making some forward-looking statements. I don't have our disclaimer, but as Daniel said, please look to our website for that. So this is a map of Canada. The blue is Saskatchewan. The yellow at the top there is the Athabasca Basin. And you can see our three main project areas, our Davidson River, our Sundog, and our Eastern Basin. Our flagship is the Davidson River project, and we've just completed our winter drill program, and that's setting us up for our next summer program. We're going to be talking a bit about that today. As Warren pointed out, you want to be in a jurisdiction that is a great place to operate, and northern Saskatchewan is always highly ranked globally. Next slide, please. So this is a map of the southwest corner where our Davidson River project is. Now, the southwest corner is the home to where you'll find NextGen Energy and Fission Uranium, where they have two of the greatest uranium discoveries in the past 10 years. Now, you can see where we are just to the west of those. And I'll tell you a bit about our company as a whole. First of all, we took this company public just last year in 2020. We went ahead to raise capital. We raised $8 million with 2 prospectus offerings. Our team has been built specifically around making discoveries in this region of Saskatchewan. I'll talk about my team in a bit. Our short-term catalyst, we just finished our winter program. We're going to be getting the assay results back in mid-May, and that's lining us up for our summer program. We just announced last week that we're going to be quadrupling the size of our summer program to 10,000 meters, and we're going to be doing some work in our northern project, the Sundog project, as well. Now, we hear about Canada and the Athabasca Basin. That's great. It's a great place to operate. But we also hear about the southwest corner, how important that is. But in reality, there's 20 plus companies working in that region. So what makes our company stand out? Well, we're not just in the Athabasca Basin. We're not just in the Southwest. We're not just an area play. If you look on that conductor right there, where you see the RRR and the Arrow project and the Spitfire, those all lie on the Patterson Lake conductor. And our theory, which we've proven out in our past 2 drill programs, that same conductor runs to the west and runs right through our project, to our warrior trend. So that is what's really exciting about this. Now, I mentioned our team. We have built a team specifically with experience in making discoveries in this region. First of all, we added Garrett Ainsworth, who came to us from NextGen. Garrett was actually the geologist who made the radioactive boulder discovery, which led to the RRR project and Fission. Fission then took out his company Alpha, and Garrett moved over to NextGen, where he was our VP of exploration for several years. The day he left NextGen, he joined our project, and because he wanted to go after and make another discovery. On top of Garrett, we also have Galen McNamara, who's come to us from NextGen, who worked closely with Garrett at NextGen. And then this past summer, we added Sean Hilliker, who was our project geologist. Sean spent the last 5 years doing his master's degree on the Arrow deposit. So these guys know this project very well, and they're able to, look at our exploration project, look at the core coming under the ground, and compare that directly to what they've seen at Arrow, which is monumental. You want to have guys that have made discoveries and know the specific rocks they're looking at. Next slide, please. We talk about, when do you want to invest in a company? You can actually make great money, as the other 2 companies have said. Companies who are in operation are moving into operation from development, but you can also make a lot of money when you are joining a company pre-discovery. And that's where we are. We are at the beginning of the speculation phase, pre-discovery. If you look at our peers, NextGen and Fission, their share prices went from, low in the 10 to 20 cents to up into the dollars when they made their discoveries, and they made those discoveries in bear markets. And I think we're all in the same belief that we are about to enter a great bull market for the uranium space. On top of that, we're doing a fantastic job of marketing. You not just are doing the exploration work, but you have to tell your story. So if you look at any of our social media, our website, we do a great job of telling our story and really reaching out to the investment community. Next slide, please. So this is a look at our Davidson River project again, and you can see there are 4 main trends there. We've done the majority of our work to date. We've got 20 holes into this project, which is a very small amount in a massive project like this. And we are going to be doing another 20 holes this summer. So far, all 19 holes have been on the Warrior trend with 1 hole on the Saint. This summer, we're going to be expanding that testing, our Bronco, our Thunderbird, and really getting into the Saint trend, which we believe looks very similar geophysically to the Arrow deposit. And that would be the final slide. So I just wanted to wrap this up by letting everyone know that we are a junior uranium exploration company focused in the Athabasca Basin of Saskatchewan. We're early stage, and it's a fantastic time to join us and come along for the ride. So any questions, I'd be happy to take those right now.
Okay, sure. Thank you very much for that. And I think there was 1 or 2 comments in the chat box about, obviously says Saskatchewan being just a fantastic sort of like destination for uranium, and obviously being sort of like home to like many of the sort of like great new discoveries there. What would you say is the key to success in the Athabasca Basin?
Well, I touched on it briefly there. I mean, the key to success, first of all, you have to have a world-class project, which we believe we have. Then you have to build a team who've made discoveries, who know the region and know how to operate there. And then you also have to have great relationships with the vendors. So we work very closely with our First Nations partners. We have full consent to work with them. We're fully permitted. We're cashed up, and we're in a great place to continue our drill programs.
Mm-hmm. Warren, what are your thoughts on standard uranium, and any sort of questions for John?
Well, there's no secret I'm a huge fan of that region, especially the Southwest Athabasca Basin where they're operating. They've got really good neighbors in NextGen especially.
Mhm.
And I believe in that region, in the land that's owned by Fission and NextGen, in the coming decades, as more and more money is spent in that region, we're going to get some other big discoveries. And based on what I've seen, globally, as far as prospective ground, the standard uranium ground, as far as prospectivity is in the area, which is southwestern Athabasca Basin, that I think is the most prospective in the world. And if I was building a uranium company for this cycle, I would want to get some land there. It sounds like you've already done that. Who would I want on my team? I'd probably try and grab Garrett, like you guys have. He did great work at his previous 2 companies, and I was quite impressed with it. So he'll know if he's probably picked up a few tricks in his day. So I quite like that. Now, for an investor willing to take a punt on you because you haven't made a discovery yet, what is your market cap right now?
Yeah, so market cap is around $22 million, where our share price is around 24 cents today. We've got 93 million shares out.
All right, yeah. Well, this is, I think you're ideally suited, situated here for some fun if we get a good uranium market. You're in a great neighborhood, and I know there will be some other big discoveries made in that region, and good luck to you in finding one of those big discoveries that are just sitting out there waiting for somebody to find.
Thanks, Warren. Really appreciate that vote of confidence.
Mm-hmm. Okay. So just kind of and so another question from myself to you, John, is assuming that we obviously are at the start of the next uranium cycle. I think I'm right in saying the last uranium cycle, we probably end up with about 400 to 500 new uranium mining companies arriving on the sort of scene. How will you just stand out from everyone else?
Well, like what happened back in that last cycle, the numbers went from 50 to 60 to up to 400. You're right. It's very important to understand that it's happening right now. There are companies popping up in the Athabasca Basin right now, many who've staked claims or they've JV projects, but have never actually been to Saskatchewan, don't have any experience operating or any people who ever work there. So what I often caution investors are, make sure you understand who the people are running the projects, who they are. Do they have any experience? Do they actually know how to operate? Do they have relationships with the vendors? Those are all crucial, and not just the First Nations, but also the drilling companies, the helicopter companies. You have to have all those things come together to actually run a proper exploration company. So stay very wary of companies who show up in Saskatchewan but have no real experience or any past history working there.
You mentioned First Nations there. Can you just tell us a little bit about your ESG policy?
Say that again, please.
Yeah, you just mentioned First Nations there. Can you tell us a little bit about your ESG policy and your approach to First Nations?
Sure. So when we started this company at the end of 2017, one of my first trips was to Saskatchewan to meet with the Chief Teddy Clark of the Clearwater River Dene Nation, where our flagship project is. So we've built our relationship on trust for the past 4 years. And before we even started any exploration work, so we had gone hand in hand with Chief Clark to the Saskatchewan government, putting in for a permit application. So it is crucial to build the trust, to build those relationships and going forward. Now in northern Saskatchewan, where our Sundog project is, there's a new group that's representing many First Nations, and we're in discussions with consent. We have all our permits to move forward, but we haven't moved forward until we have full consent. So that is crucial. And I caution investors to watch this space carefully. Not only do you need to have your permits in place, you now also have to have full consent from these First Nations groups in Saskatchewan. And that's going to be very interesting to play out over the next few years.
Okay, thank you very, very much for that. I think we've just got about over sort of 10 minutes to go. I'd invite, if anyone's got any questions, to please sort of post them in the chat box. I see we've already got like a few that have been posted that I will look to go and come around to. If I can just start off with a general kind of question, and I'll post it to yourself first, Warren, and then invite the other panelists to go and comment. I joined Mines and Money back in 2014, and every year, people tell me this will be the year of uranium, yet it never ever quite happens. What could go wrong this time in 2021?
Yeah, well, the thing to remember is expectations of mine and that of other commentators in the uranium space are much different than that of, let's say, gold. If I told you at $1,200 gold that gold was going to go to 2,000 an ounce, would that be considered a bull market? Well, the thing is, I was getting bullish on uranium when it was $17 or $18 a few years ago. It wasn't that long ago, and now we're in the low 30s. In fact, it hit, I think last year, hit a high of around $34. So it is almost doubled. And so in my books, in most commodities, a doubling is a bit of a bull market. Now, the reason my expectations are higher, and I imagine that those on the panel here are higher too, is that uranium, when it gets going, it rockets, and it could really go. And we may see quadruple, quintuple from that low of 17, 18 bucks in a good uranium market. So that's, I think expectations are important there. So what could screw us up? I think the biggest risk would be a bunch of negative hype about the uranium market. If another Fukushima happened or something along those lines that would get the governments off the pro-nuclear stance that they're currently on. And this is despite any of the issues we've had with nuclear energy over the past 70 years, nuclear energy remains the safest form of baseload power there is. It's safer than hydro. Like hydro has killed so many people. It's not, just when dams break, hydro dams break, they kill hundreds and hundreds and hundreds of people. That does not happen with uranium. And nuclear energy. And that's why I'm so excited about the next generation fail-safe modular reactors, is that'll, over time, as those get deployed, it'll reduce the risk of big accidents and allow people to feel considerably more comfortable about nuclear power. And that's what I'm probably the most excited about, is the future with, fail-safe modular nuclear reactors. And we'll stop blighting the landscape with these stupid solar farms and wind farms that have reasonably short lives, and we'll have to put them all back in a landfill when their useful life is over with. Whereas, we're seeing lives 50 plus 60 years, even higher with some of these nuclear plants, even with the old technology. They last forever, and they don't take up a lot of land, and they don't blight the landscape. So, and hopefully one day we'll take the dams off the rivers and get our rivers back to being natural, because we'll have so much low-cost nuclear power that we won't need our rivers to be dammed up. So,
and then just bringing in Jeff Klenda, how do you sort of deal with that side of your business? Because presumably in the US you must get a lot of public lobbying against nuclear. How do you go and deal with that, and obviously go and convince the sort of public, that it is actually safe, and that sort of a company like URNG is actually a perfectly safe company?
Well, I'll tell you that you're really hitting on something now that's this is a key factor for us as we've been moving into 2021. We have the uranium reserve appropriated for. That's good. The problem is that we don't have the political appointees in place yet. We do have the head of the Department of Energy, and now we have an undersecretary in place as well, but we do not have the head of the Nuclear Energy Division of the Department of Energy. So we can't stand up the uranium reserve. So good things are happening. They're just going to take a little bit more time. But one of the things that we are focusing on, we are members of the Uranium Producers of America, and we're focusing on gaining support on the left side of the aisle. Under the Trump administration, we had strong support among the Republicans, and now we have to go out there and we have to do a better job of building that support on the left side of the aisle. But one of the things that I will say is that we have seen, and when I mentioned earlier that under this administration, you're hearing all the right things. We appear to be getting a lot of bipartisan support. We've been doing fly-ins with the other side of the aisle, the left, and we've been getting strong support spoken, and I think that that'll translate into approval of legislation that's out there and pending right now, which is going to be very good, not only for the uranium producers, but also for the electricity producers at the nuclear power plants and every part of the fuel cycle in between. So I think that we've got the bipartisan support now. I think that that's something that is growing, and it's something that's absolutely necessary. Now that the Biden administration has made it a priority, we will get the bipartisan support. Critical.
And then bringing in Daniel, in countries like Mali and Niger, what is the sort of cross-party support like for uranium and nuclear? If there was to be a change in sort of government at some stage in the future, would that sort of disrupt the investment thesis for Goviex?
Not at all. Niger has been gone through multiple different governments since the early 70s. 60% of its exports is uranium. It's 10% of the budget is paid for by the taxes on uranium. It maintains the status quo structure that was there because 20% of those taxes have to go back into the north for reinvestment in infrastructure and the like. So, no, totally not. If you look at Zambia and Niger, these are two countries out of 13 in Africa that are actually working with the IEA to actually go nuclear. Zambia particularly is working with Rosatom to develop the skills that are required to develop nuclear technology and build out nuclear reactors. So, that's the one thing we've not talked about in this talk so far is that, all of these SMRs geopolitically are all pointing at Africa. Africa cannot handle a big reactor other than South Africa and Egypt. They're the only two that have got grids big enough to handle it. But the others can all handle small reactors. Africa's biggest problem is that its population grows faster than its power generation, and which is why it struggles to grow as a continent. If you look at it from a GDP, it correlates brilliantly. But if you can put in something like nuclear energy, and particularly nuclear energy, because if you look at Africa power generation now, it's actually one per capita, one of the highest CO2 emitters. It's very low because it's small, but if you look at how it generates power, it's all carbon based. So that's why you're seeing a lot of these nations pushing towards air. So I don't see the politics in Africa being negative towards nuclear. I think they're all starting to realize as well, it's the way they can get fast generated power.
Sure. And just so that actually sort of ties in with the question that's again been posted in the chat box about SMR, smaller modular reactors becoming a reality. What sort of like impact would that have on total demand for uranium? Are we talking about like a doubling in demand, or I don't know whether any of the panelists have got like an accurate figure or opinion on that?
No, I don't think there is one out there at the moment, but let's put it in scale. A single large reactor is 1.3 gigawatts of power. A small SMR is anything from 10 megawatts to 300 megawatts. So you're going to need a lot of SMRs to kind of match up with one big reactor. But I think what you're going to see as these grids get bigger, particularly across Africa and in the US's approach, is to put them into where coal-fired power stations are. That's the way to go forward. So I think that you will see a slow and steady. I think the other important thing on the SMRs is that back to the original question you had for Jeff, which is perception. People are scared of big reactors, but I think when they realize there's a 10 meg reactor down the end of the road in a small shed, and they realize they've been living next to it, people's perceptions change quite a lot, and they realize that nuclear actually is incredibly safe. And I think there was an article recently that that I saw a couple of years ago. Rare earths actually produce more radioactive waste than our industry does by a very large amount.
Wow.
The only reason no one cares about it is it's all in China. So put it in context.
Yeah, and John, I can see you like nodding your head in agreement to Daniel's sort of comments. What is the public perception like in Saskatchewan and Canada towards nuclear energy? Do you have some of the challenges that say like Jeff has, and like if so, how do you sort of like convince people on the ground that nuclear is actually safe?
Well, I'm actually glad you asked me that, because in Canada recently we've got the government moving towards looking at small modular reactors. We have our province of Saskatchewan, our premier has said that he's willing to move forward with small modular reactors, and I'd love to see an SMR actually powering the north. Wouldn't that be incredible if we could have an SMR up there running all these uranium mines and fueling it with Saskatchewan uranium? And talk about power. Everything up there is run on diesel generators in some of these regions, so that would be fantastic.
Sure. Okay. That's good. I think we're just coming to the sort of like top of the hour. So I'd just like to maybe just return to our guest, sort of our guest, investor guest, obviously, Warren from Rosseau Asset Management. If you had sort of like one final piece of advice to the audience who are kind of like, listen to three really great sort of like mining projects, and who are sort of like thinking about their sort of investments for the upcoming year, what would be your sort of one of the two pieces of advice to them about the markets for uranium over the next 12 months and how to invest?
Yeah, well, this is the reasonably safe, the safer part of this, of the investing in the uranium cycle, because valuations aren't crazy. People are just starting out. We don't have 400 juniors like we had last cycle. The people that are in the business have been in the business for a while. They're generally with good people, but as you grow from 60 or 50 or 60 companies to 400, the management team and the properties get diluted massively. So at this early stage of the cycle, before things start to run, it's the safest time to invest. But just remember, when you start seeing 400 juniors out there and everybody in the world is talking about uranium, the price of uranium is 80, 90 bucks, and you've just made, 3, 4, 5, 6, whatever times your money on uranium, don't keep plowing it back into uranium. There will be a point at which to take profits and sit back for a while. So just be cognizant of that at the later part of the cycle. But at this stage of the cycle, there's generally decent quality people running most juniors out there, and the price hasn't really run yet. Multiples aren't crazy. It's not the worst time to invest.
Okay. And I think that on that sort of like positive note, I think then let's end this week's 5 at 5. Again, a huge thank you to our guests, Warren Irwin, John Bay, Daniel Major, and Jeff Klenda. Many thanks to our guests, the audience. Many thanks to our sponsors, Standard Uranium, Goviex Uranium, and Year of Energy, as well as the Resource Global Network. See you next week. Until then, stay safe. Thank you very much.
Thank you.
Thank you all.